Hi friends and welcome to our pre-market analysis for Monday. The Nifty 50 is coming off a choppy end with the index finally taking a breather after an impressive multi-day rally that propelled it toward the 26,000 mark. The last trading session saw some profit booking, with the Nifty closing near the 25,800 level. Our focus this morning will be on defining the key battlegrounds using the support and resistance levels. Coming to global cues and sentiment, let's quickly set the stage with the global backdrop. Sentiment remains generally cautiously optimistic, driven by expectations of an ongoing uptrend in major US indices. However, we've seen volatility globally, tied to earnings reports and persistent geopolitical tensions, which often prompts short-term corrections. On the domestic front, the immediate focus is on whether the market can hold the gains from the recent uptrend. The underlying trend remains positive, with strong fundamentals cited by many analysts, but the index is now showing signs of being in an overbought zone on daily charts, which suggests consolidation or a corrective pause is highly probable at these elevated levels. This means Monday's open will be crucial in setting the tone for the week. Key technical levels, the trading range. Now, let's drill down into the support and resistance, S and R, levels provided. The last closing price of roughly 25,797 places the Nifty right in the middle of a very tight initial range. AIK, the immediate resistance zone, the bull's target. The immediate hurdle is the R1 at 25,885 and the slightly stronger R2 at 25,943. A breach and sustain above these levels would signal that the bulls are ready to retest the psychological and options heavy hurdle of 26,000. The maximum call open interest is currently built up around the 26,000 strike, making it a powerful magnet and a key resistance point. Crucial breakout level. If Nifty breaks and holds above the R3 at 26,033, we could see a swift move higher toward R4, 26,091. And potentially even the R6 at 26,207, which aligns closely with recent all-time high territory. Though, the crucial support zone, the bear's target, on the downside, our support is immediately tested. The first line of defense is S1 at 25,737. This level is vital. Losing S1 will instantly bring the index into a profit-booking phase, pulling it down towards the next major technical support. Primary support anchor. The most critical zone for the bulls to defend is between S2 at 25,647 and S3 at 25,552. The broader market view sees the 25,500-25,700 band as a strong demand area. A decisive break below S3 would be a major cause for concern, confirming a deeper correction. Correction deepens. If the Nifty cannot hold the 25,500 area, we prepared for a cascade down towards S5, 25,404, and the final major support of S6 at 25,314 for the week. Trading scenarios for Monday's open. Based on these levels, we can define three primary scenarios for the open. AIK, bullish scenario, gap up, strong open. If Nifty opens or quickly crosses R1, 25,885, the momentum trade is to target R2, 25,943, and then the psychological barrier of 26,000. The key is strong follow-through buying. Though, bearish scenario, gap down, weak open. If Nifty opens or slips below S1, 25,737, the immediate trade is to anticipate a test of the important support at S2, 25,647. Momentum shorts will become active if S3, 25,552, is broken. Theme. Consolidation. Flat open. If the market opens flat around the current closing price, expect initial choppiness between R1 and S1. In this case, patience is key. Wait for a clear break on either side before initiating a directional trade. Finally, coming to conclusion, the Nifty 50 is at a key inflection point. The path to new highs requires conquering the 26,000 hurdle, with R1, 25,885, being the first step. The risk on trade is protected as long as the index holds above S2, 25,647. Traders should maintain a buy on dips approach, but only near confirmed support levels, and should be ready to book profits quickly if momentum fades near the key resistance zones. Monitor Bank Nifty and global market movements closely for confirming signals.